Despite initial worries that the first Bitcoin, BTC, futures-backed ETF would turn out too popular for its own good, data from the ETF's issuer, ProShares, shows that it is still trading at modest premium. As of Thursday, the ProShares Bitcoin Strategy ETF with the ticker BITO traded at a premium over its net asset value, NAV, of just 0.04%, after having seen premiums as high as 0.15% on October 21st, data from ProShares showed. The data is interesting given previous reports of ProShares being in danger of hitting the limit set by the Chicago Mercantile Exchange, CME, on how many front-month futures contracts a single entity can hold. The current limit is still that a single ETF can hold a maximum of 2,000 front-month futures contracts, with BITO amassing nearly 1,900 contracts after just 2 days of trading. And although the CME has said that it will increase the limit on how many front-month contracts can be held to 4,000 starting in November, BITO has already expanded its buying to longer-dated contracts to get around the problem. According to data current as of Wednesday, ProShares ETF now holds 233 Bitcoin futures contracts expiring in November, and only 572 October contracts, with each contract representing the value of 5 BTC. As is well known among futures traders, however, the price of a futures contract typically rises the further away its expiration date is, a situation known as contango. As such, having to buy longer-dated contracts will normally cause tracking errors in the price of the ETF relative to the spot price of Bitcoin. Meanwhile, the competing Bitcoin ETF launched by Valkyrie with ticker BTF remains smaller than BITO, which also means that it is able to keep a larger share of its total holdings as front-month contracts. This fact was also pointed out by Valkyrie's Chief Investment Officer, CIO, Stephen McClurg on CNBC on Monday, where he said that the size of their ETF means they can stick with the front months, and we showed that we're tracking the futures really closely. It's a concern for ProShares, and that's why if that doesn't happen, we've seen some signals from the folks at ProShares that they're going to look at other derivatives like swaps or structured notes able to fill the demand, he continued. And according to data from Valkyrie, it appears the firm's CIO is right that their ETF is tracking at least the futures market very closely.